Hello and welcome back. Many of you who have been trading in the stock market since 2014 definitely remember GoPro. I would say the rise and fall of GoPro back then. Because when the company actually had its IPO, it really skyrocketed for a while and then had a massive dump. People started selling the stock. And let's take a look at the stock analysis chart here so you'll see what I'm talking about. First off, right now the company is at $8.5, and if you take a look at the max chart, look at what's going on here. Now again, the IPO was back at 2014 over here, and it went as high as $82, and then started going down and down and down and down, and kind of trading off of a base pattern right now. And it's trading at about $5 to $10 for the most part, with some exceptions, 11, 12, but not much more than that. Now, this was a trend of the day. This was the sexy stock of the day. It was kind of like the Tesla of the day. It was going higher and higher for no reason. And after a while, it had a massive sell-off over here. And what happened is the company kind of came back to its normal senses, and people kind of abandoned the company for the next trend, for the next sexy stock. But this is when we, value investors, come into play. This is when we want to be examining the company, when it's actually now there's not much trend going on, and the company is just a plain company that's trading at a normal value, and it's not just people buying for no reason. So what we do want to examine is the financials here, and the first thing that you will notice here is that the P/E ratio and the price to free cash flow ratio are very low. They used to be negative, which means that the company was losing money back in 2019. But the last 2 or 3 years, they have been making money, and actually making money that when compared to the stock price is actually fairly low for this amount of money. Plus, they have also been buying back shares, so they started believing that the company's stock price is actually undervalued right now, and I kind of seem to agree here. So let's take a little bit of a closer look at the next metrics here. Look at the free cash flow to total liabilities. This takes the 1 year free cash flow, the last year free cash flow, and divides it to the total liabilities number, tries to discover how many years it would take to pay them back if we really wanted to. And it's a measure of how much debt the company has, and how long it would take them to fulfill the whole thing. So this is very good as well. The company doesn't seem to have a lot of debt when you compare it to the free cash flow that they are making. Now, the 5-year revenue growth is a little bit down, but that can happen. Generally speaking, we're looking at a similar growth. So, and yeah, the growth levels are not very high. They don't seem to be increasing that much, and they had a massive slump in 2020 again. I suppose it has to do with the pandemic years. But what is more interesting is the increase in net income growth and free cash flow growth. 300% here, that's the 5-year increase, and 467% here. And with that, they are also increasing their equity as well, pretty massively here. And you notice that they are not actually issuing shares, so they are not actually increasing their equity via shares. They are increasing their equity via sales, and that's a good thing. So the other returns here are fairly great here. This return on equity, for example, is outstanding over here, of course, and good margins as well. So I think the subscription service that they have introduced probably actually really helps with the company's financials here. But we're looking at some very interesting financials here, yeah. And the next thing that I want to do is actually examine the stock price and compare it to what the company is doing financially. So the revenue growth has been about steady, as we have already seen. So the 3-year one has been a little bit better, but because of the of years 2017 and 2018 is really skewed downwards. So I don't think these years are representative, although 2020 was bad, but again, this was the pandemic year. So right now it seems like we're gonna be heading into normal territory, yet I'm gonna go conservative. I'm gonna go 1, 2, and 3 here. I'm gonna be very conservative, because I don't know what the company's revenue is going to be, and I want to do that because I want to get a margin of safety here if I'm going to be buying GoPro. I do think the company has a little bit of a risk, but I may be willing to buy it if if the stock price is right. For this kind of estimates, for sure, these are not high estimates. The net income margins here, again, we'll have some years that were negative, of course. It's pretty much getting better, but it's the last year that was the odd one out. Of course, we cannot use this. We have to use low values again. The 3-year average is 7, the 5-year average is minus because it's skewed downwards, as I mentioned earlier, and the last year is 32%. So we're gonna go 5, 6, and let's go actually 5, 8, and 10 here. I think this is very possible to happen, and the free cash flow margin is going to be somewhere in between. I mean, you can exclude this one, but I'd say maybe 60, 70, and 80 makes sense. And the annual return that I typically want to make is 13% because I can make 10% from an S&P 500 ETF. And I hit calculate here, and you will notice that with these kinds of estimates here, which are fairly conservative, we are sitting at GoPro, actually, at GoPro's price being relatively fine for the current stance of the company's financials. So we're very, very close to the medium estimates and actually lower than the high estimates. And these high estimates are not that high. Frankly speaking, I think that the revenue that the company can achieve could definitely be like something like 5, 7, and 9, for instance, here. I wouldn't be surprised by that at all, especially with the subscription going on right now. And this is not that insane growth, of course. It's just that it hasn't happened with GoPro in its history for the most part in the last 5 years. It's just 2021 that has been a great year for them. But if we use these values, which are, I mean, they are normal revenue growth values, I mean, for a company of this sort, based on what they're doing. We do have to take a little bit of a leap of faith here because of a bad year. I mean, the pandemic has really, really skewed things. But based on the trajectory, it looks like 5, 7, and 9 could happen. And if you hit calculate on this one, then you are getting an even better value here. So right now we're sitting at a company. We're looking at a company that has some potential here, and it's actually undervalued, maybe based on the actual financials that the company has been doing in the past couple of years or so, for the most part. So this is why I wanted to make this video. I think this is an opportunity that it's worth taking a look at. It looks like the company is back to being a very, very interesting potential purchase here. And actually right now the pre-market is down, so it actually could even give us a better price here. But I kind of like it where it is right now. It looks cheap to me, and it looks like they're doing better and better in terms of their financials. This is something that I really like, and especially the fact that it's not the trend right now. Nobody's talking about GoPro, and this is when I like buying stocks. And so I think that this is a stock definitely worth looking at, and it does make sense for somebody to potentially get a little bit here. I'm actually thinking it myself, to tell you the truth. It is a little bit of a risk here, but this kind of price looks very, very interesting to me, especially based on what the company is doing here in terms of its financials. So I could see myself adding a little bit. I wouldn't go overboard, of course. I wouldn't do that for sure. But maybe just a small percentage of a portfolio, very small one, I'd say. I don't know, 0.5, 1% or something of that sort could be interesting here for this kind of company, I'd say. So I'll be thinking about it myself. Thank you for watching the video. I hope you enjoyed. Please leave a like if you did. That really helps. And remember to subscribe, because in about a month or so I'm going to be giving you access to this tool. You'll be the first to know, and hit the notification bell so that you get the notification first and you are able to join the moment it's out. And so thank you for watching this one, and I'll see you in the next one. Bye-bye.